Good afternoon. This is the Chorus Call conference operator. Welcome and thank you for joining. This is the 31st of July. We're going to present the results as at the 30th of June 2018. As a reminder, all participants are in the listen-only mode. After the presentation, there will be an opportunity to ask questions. Should anyone need assistance during the conference call, they may signal an operator by pressing star and O on their telephone. At this time, I would like to turn the conference over to Mrs. Angrisani, who is Investor Relations Manager. Please go ahead, Madam. Thank you very much for being online to listen to the half-year results of 2018. Now, Mr. Donnarumma, the CEO, and Mr. Gola will illustrate the results, and there will be time later for the Q&A. Good afternoon to you all. I'd like to give a very short introduction to leave more room for Mr. Gola to present the half-year results. I would like to just point out a few concepts, a few ideas concerning the performance of the company and the most distinctive elements and highlights compared to last year. Now, essentially, last year in May 2017, the company showed some criticalities, the most evident being the water emergency last year. We've talked about it before. The water emergency was a moment of great effort and a very challenging time, but 1 year later, that has, with hindsight, that has strengthened the company. We were able to improve the corporate processes, and that translated into some results that were presented in November 2017, and namely the planning of structural investments to improve our infrastructure. I intended to mention this because this lies at the very basis of our industrial plan, our business plan, the recovery of the infrastructure that we own. We have important lighting and water supply infrastructure, and that is the basis for our industrial plan. 1 year later, in the first half year of the 5 years that the plan spans and spreads over, we see our expectations confirmed as well as the challenges. So the business plan is working well. Our mechanism is well-oiled, and the organization is responding well to the management and the leadership directions and the market as well. We're working a lot on the strengthening of our key businesses, that is water and electricity, as well as on the development and reinforcement of our environment pillar. In the coming months, our business and commercial effort will also step up. We will be developing our commercial capacity in view of the end of the authority-protected market and regulated fees. In this time period, the company has better organized its own processes, as I had mentioned, and particularly credit collection. I would like to mention that that has made it possible for us to control our working capital much better. This used to be a concern for the markets as well. Actually, now the company is becoming sounder from that perspective, as proved by the figures, and this is the result of the actions that we started last summer and reinforced during the autumn with the position of CFO being given to Mr. Gola. And he'll be able to illustrate the main actions that were put in place, and then the creation of a leadership team that was largely renewed, and that was bound to bear fruit. In the last period, we've also started actions to reap business opportunities. The agreement with fiber, the key operating activities are starting now. In September, we'll be in full execution of the business plan, the shared business plan. And just like in the first half of the year, we also issued bonds with excellent results, and that has had a very positive effect on our average cost of debt. Now, moving to the highlights of the main results, I'd like to present a growth by 9% in our EBITDA, 29% for EBIT, and net profit by 38% and still growing. This is a very important result for us. Investments, as you can tell, went up by 12%, and they are absolutely in line with the expectations in our business plan. So we confirm firmly the reinforcement and strengthening of our industrial investments for the water mains and electricity, largely because, unfortunately, for our environment activities, we're lagging behind because of permitting delays, which is very often the case in our industry. The ratio stands at 2.9, the PNFN EBITDA ratio, and there's been a good result in terms of working capital, and there has been so much so that there has been cash generation in the first part of the year. In the water sector, there has been a meaningful improvement, a significant result in collections and in our subsidiaries, and we have worked very hard on a reduction of losses and leakages in our network and infrastructure, and this very project is making steady progress with very good results. So in the coming months, hopefully we'll be able to announce the approval of the final project with all the positive impact. And as early as in 2019, we hope we can launch a tender for the new equipment and plants. We're working very actively on leak reduction. But we'd like also to improve the efficiency and performance of our lighting activities, particularly in Rome. And that will not just translate into a replacement with LED lamps, but also a better control and the provision of smart services with the smarting, so to speak, of the city as a whole. In terms of the environment, luckily enough, we have started again the Aprilia plant, which had been seized temporarily, and the same with Sabaudia. And we've had excellent results in our WTE. Our company decided to revise the guidance. As you know, the guidance for 2018, which we had given before, was moving the EBITDA from +3% to +5% compared to the previous year. We feel that the EBITDA can certainly exceed 5% between now and the end of the year. And I'd like to remind everybody that in terms of our business plan, we had approximately a 6% CAGR for the first period. So probably we'll stay in an interval of 5 to 6%. Growth will be confirmed, and probably it will slightly exceed our forecast for year one because the ramp-up process is faster than we had anticipated. The commitment is 3.1 billion for 5 years, approximately 600 million per year. This year we expect to stay slightly lower, but the investment ramp-up process for water and electricity is doing very well, better than expected. Probably for the tender, we'll have a 2.6 final figure. These are the general indications, so I'd like to ask now Mr. Gola to analyze the highlights of our situation. Thank you very much, and welcome everybody. As Stefano said, the P&L was particularly positive, with consolidated revenue standing at 1.45 million, EBITDA for 150 million, up 8.6% over the previous year, EBIT at 151 million, up by 28.6%, and net profit 142 million, 37.9%. Now, these results are an improvement compared to last year. Last year we had an adjusted result we anticipated a growth in EBIT by 17%, and the net profit last year, adjusted versus adjusted, would have been lower. Stefano has anticipated our updated guidance. I will not go back to that, but our growth is now already above 5% in our EBITDA. The investments in terms of investment guidance, we have a target for net financial position on the bottom of the range that we had provided previously, standing at 2.5 billion euros. Our net debt is 2.57 million as at June the 30th, so it's increased compared to December 2017. That is slightly above the dividend, so the expected number. Okay, let's move on and look at the EBITDA performance. The EBITDA for the first half of 2018 confirms that 75% comes from regulated activities and 25% from unregulated activities. The water sector is the one with the highest proportion, 42% of the group EBITDA, and it's up by approximately 20 million compared to the previous year, while 39% of the other important area, which is energy infrastructure, has a growth by 19 million compared to the previous year. The other areas are not growing so fast or are more or less equal to last year. While the change at the group workforce level is plus 96. Now, details by area. On page 7, we have data for the water business. 192 million of EBITDA versus 172 in 2017. This growth was driven largely by Ato 2, which grew by 6.7 million euros. Quality bonus was 15.7 million, more or less equal to last year. And in the second half of the year, we're now getting to a growth in quality bonus. We're targeting a growth in quality bonus as high as 33 million. ATO 5 also grew by 4 million, and it's important to notice the growth in EBITDA coming from consolidated companies using equity, the equity method. They went from 10 million to over 17 million with a 70% increase. Now, the 27 million of growth, approximately 23 million were adjustments over the previous year, while 4 million is structural growth and improvement of structural performance over the year of our companies. It's interesting to highlight that we are at the stage when all our companies are redefining their fees and rates. For Acea, they also saw an extension of their concession with a new term extended to 2031. The investments in the area, the capex, is 156 million, plus 28.3% over the previous year.
Moving on to energy infrastructure, EBITDA grew from 160 to 179 roughly million. Such growth is mainly driven by the growth in distribution, mainly as a consequence of improved efficiency and increased rates related to the investments made on distribution. We observed a substantial growth of revenues coming from generation. I'm talking about electric power generation, hydroelectric power generation, EBITDA 3.3 million above last year, mainly because of more abundant water availability. We see a drop in margins in public lighting. This is mainly due to the fact that in the previous year we suffered the impact of the LED plan effect. So in other words, we were replacing all the lighting in the Rome municipality with LED lighting. Capex flat in the energy infrastructure year on year. Please note that when we invest on our electric power network, following the agreement with Open Fiber, we planned to lay optic fiber cables, roughly 120 kilometers, cable ducts that have been installed that will be used for fiber optics in Rome. Let's now move on to commercial and trading. EBITDA is growing by roughly 4 million from 40.6 to 44.1 million year on year. If we look at the main drivers, we observe a decline in the enhanced protection market customer base, partially offset by the growth of customers in the number of customers on the free market. We see increasing competitive pressure following the forthcoming end of the enhanced protection market. So we are reacting with very interesting commercial offers on the free market, and we are developing a new product line that will be focused on starting September next. As for gas, the number of gas customers is increasing, as is the amount of or the volume of gas sold. Let's now move on to environment. Environment reports EBITDA up to 31.8 million versus 31.3 of the previous year, so a slight increase, mainly driven by the waste to energy activity that witnessed an increase of volumes and an increase of energy prices, as well as an increase of gate fees. And the slightly better performance of the environmental business is partially offset by the poorer performance of Acea that deals with slight recovery. And this is a consequence of the well-known situation existing in this area, that is to say, sludge recovery, that witnessed a drop in volumes in the past few months. As Stefano already pointed out, the Aprilia and Sabaglia plants were restarted over the past few weeks. So we will be having the positive impact of the reopening of these two plants in the second part of the year. And then the Sabaglia composting plant and the Orvieto landfill are progressing. So according to our business plan, we'll be able to exploit the upside coming from these plants. As for the tons treated, we have reached 552 from 549 last year in terms of K-tons. Waste to energy, electricity produced has increased to quickly. A few words about the overseas. EBITDA stands at 7.3 million, up from 6.7 the previous year. We are slightly developing our equity investments that we have in companies overseas. Engineering services reports slightly dropping EBITDA as a consequence of less intercompany contracts. And as for parent company, or the holding company, the cost increase is mainly the result of review of the service contracts following the review of prices to increase them up to the market benchmark. Well, looking at the line below EBITDA, we see EBIT growing by 28.6% up to 250 million from 194.9 in 2017. Such a growth was mainly driven by depreciations, write-downs and provisions. As for depreciation, we have 162 million worth of depreciation, slightly higher than last year, but this was already evident at the end of full year 2017. This increase was related to an increased investment in IT assets with a shorter useful life. Write-downs, well, we have, first of all, low provision for credit losses due to an improved collection in 2018 and because of the transition to the IFRS 9. As for provisions, we have lower provisions simply because last year we had a 12 million provision for early retirement and redundancy scheme, which is no longer there this year. Here we get to a net profit 143 million, up roughly 38% on year. As for capex, total capex 282 million compared with the same period of the previous year. We are on page 13 now. You see that capex is almost flat, but we observe a substantial increase of capex in water in line with our business plan. So we are increasing or extending our activity of extraordinary maintenance of water centers. We are upgrading our treatment plants, and we are repairing, widening our water and sewage pipes. On page 14, we have our cash flow evolution. As you can see, the bottom line was a negative figure, 149 million, versus a negative figure of 274 million the previous year, so improved by roughly 126 million. So if we consider the evolution of our cash flow, of course, improved EBITDA by 30 million has a positive impact on our cash flow. But what is mostly relevant here is the change in our working capital, a change of 82 million versus 209 of previous year. If you remember, in Q1, our working capital absorbed 103 million of cash. In Q2, we generated cash in excess of 20 million. And this is extremely relevant because Q1 is typically the quarter where payments are made to suppliers, which of course absorbs cash. In Q2, we could, of course, generate cash without any cash absorption. The 82 million receivables are completely receivables. So in terms of Q2, we had no cash absorption because of our receivables, which clearly shows that we have improved our collection ability or capability. So all in all, we cashed more than last year, roughly 80 million more, 60 million come from the water business, 57 from A02 and the settlement by A8005. So we have improved our collection ability, but we are at the same time improving our collection ability in other businesses as well, particularly energy infrastructure, where we managed to cash in 50 million more than last year. And we are improving also in our commercial and trading, where we cashed in less as a consequence of lower revenues. But we have improved our DSO by 5 days, which means that we are progressively improving our collection ability regardless of our revenues. So also as far as water, we have improved our DSO by 3 days. Please note that the change in the working capital that occurred over the past 12 months, which is the rolling year, starting from July 2017 to the 30th of June 2018, the company generated 11 million cash coming from the changes in the working capital. So our new target in terms of net financial position at 2.6 million at the end of the year means that from the point of view of cash generation and net working capital absorbing cash will offset each other, will be neutral, and there will be no increase in the working capital at the end of the year. On page 16, our net debt, 2.5 billion roughly, of which 3.3 billion is medium long-term debt, with 790 million available in terms of short-term debt. EBITDA to net debt has remained flat at 2.9 times, which is a commendable result. As to debt reduction, as you know, in February we successfully issued a bond, 1 billion worth bonds, 300 million, 5 years, a coupon 3 months Euribor, and 700 million, 9.4 years, a fixed rate of 1.5%. So all in all, our debt is well managed. We plan to repay bonds in the second part of the year, but most will mature after 2018. You see 73% a fixed rate, and settlement is a floating rate. You can see our ratings. Fitch ratings is BBB+, Moody's Baa2, and both have a stable outlook. This is it as far as our presentation is concerned. We are definitely ready to take your questions now. Thank you very much.
I think it's time for the Q&A session. Now, we will now begin the question and answer sessions. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. To remove yourself from the question queue, please press star and 2. We kindly ask you to use handsets when asking questions. Anyone who has a question may press star and 1 at this time. The first question is from Enrico Bartoli from MainFirst. Yes, good afternoon to you all. I have a couple of questions actually, and I apologize if you've commented on that already. I'd like to ask you, in the growth of the EBITDA in electric distribution, which was very high, 14%, can you give us a breakdown of the various factors that contributed to this, increasing rates and synergies separately? And if this trend will be confirmed also in the second half of the year. And then I have a question on the commercial business. In the trading area, in the second quarter, if I got it right, your growth was very, very significant. In the first quarter, we saw a few drivers at play. Can you elaborate on the drivers, volumes, marginality, and here again, what the outlook might be for the second half of the year? And then one last question on guidance. Can you give us more details, please, concerning, again, the drivers that drove the increase in guidance? Thank you very much. Now, Mr. Gola is going to address the questions that you asked. Okay. Now, the electricity supply EBITDA growth, well, a substantial part came from increases in rates. Increases in rates also had an impact, and also it was an improvement compared to the estimates for 2017. Approximately 6 million come from 2017, and the balance, approximately 11 to 12 million, was cashed in 2018. So this part in 2018 also felt the impact in improvement from the improvement in performance. And we expect that to continue through the second half of the year. Second question on the trading business for Italy. Now, the trading EBITDA, in that respect, growth is very small, and it comes from a reduction in commercial volumes, lower acquisitions, and lower trading costs. And we stand at a stage where we are rethinking our model and positioning, and so we did not spend much in terms of advertising either. And in all of that, there's also another element which is worth 3.5 million. That is a change in accounting principles, moving to IFRS 9. 15. I'd like to go back to the drivers in the guideline growth. We feel that the trends in the first half year confirms all our assumptions. We are not just considering exogenous items, we're just considering organic growth that will take us by the end of the year to better results, improved results versus what we had anticipated. So the driver essentially is all based on organic growth and continuing our capex investments and cost efficiency with the recovery also of credits by a more effective collection. And the figures will be positively affected by this mainly. There's someone else with a question. The question is from Sara Piccinini, Mediobanca. Yes, good afternoon, and thank you for your presentation. I'd like to ask a couple more questions. First is on the environment business. There's a regulatory uncertainty which is still with us. We expected the uncertainty to be solved during the past quarter, particularly with respect to Acea, but it's still there. Now, the fact of reopening the new plants in Aprilia and Sabaudia that will become efficient by the second half of the year, will that offset the negative performance by Acea? What are your expectations for this business in the second half of the year? I have a second question, which is a clarification on the guidance and working capital. My question is it correct to say that you expected a negative contribution from working capital by approximately 150 million full year, while we're now expecting a negative impact? Is that the case? Now, concerning your first question, is the answer. The reopening of these two plants has a positive effect on the general performance, but we do not expect a big growth in the environment business this year. It will come in the next plan years if we continue as we intend to enhance our plans and in also expanding our interest and scope of interest with the development of new investments in this area. Now, this does not only apply to the environment business, but also for two other businesses, such as the gas business. Now, the floor will go to Mr. Gola for the rest of the question. Now, the guidance is in line with the guidance in the net financial position. We expected a negative working capital because of the absorption by approximately 150 million. Now we expect a neutral result of the second half of the year. The 80 negative that we still see today might disappear by year end. And so compared to the initial guidance, we can easily expect an improvement by 50 to 60 million. Next question will be asked by Enrico Bartoli and it's a follow-up on his previous questions. Now, concerning the regulatory situation, in the past few days, the press mentioned that debate has begun at the political level on public water, and again, new proposals to remove water from the scope of the authorities' control. Can you give us some indications? What are your anticipations? Do you see any risks for the water business held by Acea? Yes, we got the same news and read the same declarations, and we started talking at the industry level, not as an individual company, at the trade or industry level with the new government, and certainly we'll have to delve deeper into this subject to better study what they intend to do. Companies like ours will certainly not be the first to feel the impact of any new regulations, adverse regulations, because we are listed, but undoubtedly we feel that the government's directions will have to be monitored closely, as well as in a spirit of true cooperation, trying to contribute to bringing better service for our users. Thank you. Now, for any other questions, please remember that you're supposed to press star and 1 on your phone. Ladies and gentlemen, for the time being, there are no other questions in the queue. I'd like to thank you for participating in this call, and our Investor Relations Office is available for any further information. Thank you all for attending.